The hardest thing is to get pre-approved. But you know what? It's easy. It's easy to fall out of escrow. It's so hard to lose weight, but how much easier is it for you to gain weight? That's very similar to buying a home. So we're going to go over the do's and don'ts after you've been approved. If you want to make sure you stay approved, you want to follow these do's and don'ts. I see a lot of people get pre-approved, but they don't realize their profile will change. If it changes while they're shopping for a home, they can fall out of escrow. So number one do's, let's talk about the do's first. Do. Stay consistent in your work. If you are self-employed, make sure you continue those deposits. Make sure it's consistent. Things have not changed how you do business. If you're a wage earner, if you work 40 hours a week, work your 40 hours a week. If you work part-time, keep up with your part-time. Yes, people do buy a home working part-time. So if you work 15 hours a week, stay working 15. Don't take a break and you know what, this week, I'm going to do 10. Stay consistent. If you are in a job that you kill it in commissions, make sure your commission don't change. You do not want a decline in income when it comes to commission over time. You can't control bonus sometimes, but stay consistent. That is a do. Stay consistent. Step 2, send your loan officer your pay stubs and paperwork swiftly. If you want the loans to move fast, you want to make sure you upload all your paperwork to your loan officer ASAP. Do not drag. Do not wait 2-3 days. Upload everything right away. So they have time to review it to make sure it's going to meet the underwriter's needs. Some of you guys are going for that underwritten approval and not pre-approval. Clear those underwritten conditions ASAP. So you want to make sure you clear those conditions. You submit everything they ask for. They want something, do it. But don't take time off of work to do it because you don't want your income to change. Number 3, save money. Do your usual spending. I'm not saying go out and all of a sudden be a hermit and not leave the house, but make sure you don't go ham. Some people start buying furniture, buying things, and they're short to close maybe $1,000, $2,000. Things happen. They might have to pay off debt to qualify. Don't spend money after you've been qualified. Don't think I've been approved. They've seen this. Let me start spending. Save that money. I've seen so many people. They're short to close. Now they have to go ask for a gift because the impounds change. Let's say they're supposed to fund in October and they fund in November, and that's one more month of reserves they got to collect. And let's say your impounds are $1,000. So now you have to save an extra $1,000. Be careful. Make sure you don't go out and go crazy spending until you close escrow. The next one, pay your bills on time. Make sure you got that auto pay. Pay all your bills on time. It sounds crazy, but I've seen so many people miss a bill while they're approved. It's crazy. If you miss that bill and it's a 30-day late, guess what? It brings down your credit score. So my next one, answer your phone. You want to make sure after you've been pre-approved, answer your phone. Not a lot of people put this one in the do's and don'ts, I'll tell you that right now. But I know it because experience. I'm not ripping off some other lenders' do's and don'ts. This is my own. Answer your phone. For some reason, when you get approved, pre-approved, especially people in that 620, 680 FICO, there's a reason why you're not 700, but it's okay. I'm not hating. But when the phone rings, I don't care who it is, pick it up. You don't want one of your debts to turn to a collection. And one of them, they try to call to collect from you, either that cable box you're trying to return, that cell phone you never paid off, whatever it is. It might be a potential spam call, but take that call. Make sure you don't dodge or forget or didn't answer anyone trying to collect money from you, because they can wax your credit with the collection because you didn't respond. And guess what? Boom, it brings down your credit. Check it out. My wife and I, we went to Hawaii last April, March. So we paid for our COVID test, but the company, they changed billing companies and they haven't transferred the money over. And we didn't know until we got this letter, and it was almost a collection. We had to claw and beg. If we were shopping for home, I would have been more stressed. So answer your phone. Answer your phone, guys. I'm telling you, the people that 620, 680, I see it happen pretty often. The last thing you want to do is a 30-day late or a collection this pops you in the face. And after 90 days, when your credit expires and they have to rerun that credit, they're going to see that collection. And you don't want them to see that because they can bring down your credit. And last but not least, give your loan officer some referrals. If they do a good job, send them your friends and families. Send them your coworkers. It is important. They live off of not hopes and dreams. They live off of your referrals. So let's recap the do's. So stay consistent with your pay. Send your loan officer all your updated documents. If you have a chance to get an underwritten approval and not a pre-approval, get that stuff cleared. Move quick. Save money. Pay your bills on time. Answer your phone. You don't want to dodge any collectors, or they might be a collector. Even if it's a spam call, tell them to go shove it where the sun don't shine. But do not dodge any phone calls. And give your loan officer some love. Give them some referrals. They did a good job. Let's go over the don'ts. The don'ts are pretty easy. Don't take time off of work. So if you use overtime or bonus to qualify to buy, guess what? If that thing declines more than 20%, they might not let you use your bonus overtime to qualify. If you were working part-time 20 hours a week, 15 hours a week, and all of a sudden you work 10, and they see it on your paycheck, guess what? They're going to give you the declining income. If your lender, you want to ask them, did you use overtime bonus to qualify me? If they did, you make sure you keep that thing up. Bonus, overtime, or commission. Make sure you keep that strong. Make sure you're working your 40 hours a week. If you're not working 40 hours a week, make sure you get paid vacation so your income does not decline while you're taking time off. Another one. This one is the battle of all loan officers. You got the new loan officers that know how to read off the internet, which just sucks. It says so on the internet, but doesn't mean it's real. Do not run your credit with multiple lenders. When someone comes to me and wants me to shop their loan, I already asked for their copy of their credit report. I do not want to run their credit. I know the CFPB, Experian, TransUnion, they say that a lender, once they run your credit, you have 45 days to have other multiple lenders run your credit to shop for a mortgage. Good luck with that. Don't come to me. I'll tell you, hey, you know what? I'm not going to want to run it because I don't want to be that lender that brings down your credit score. Why do lenders, if they know that, wants to run your credit? Because that psychologically is the first step of locking you in. When they run your credit, it's like you're that first step to committing to them. Do not run your credit with multiple lenders. Some loan officers said it's okay. I've ran enough credit in my life, talked to enough credit repair people. When they run your credit, it is a hard inquiry. Well, CFPB says that's one hard credit pull. Look at your credit report. I know when other lenders are running your credit because other inquiries are on the bottom of your credit report under other inquiries. That's your own risk. But for me, if you're going to be my client, I'm not going to run your credit unless you're for sure going with me and you're not going to run it with 10 other people. So do not let your credit be ran multiple times. Next one, do not run up your credit cards. I know you have to save money. Just live normal. Don't go ham. Do not increase the balances on your credit card because if you increase the balance, it brings up your utilization. If your credit expires, they're going to have to run the credit again and it brings down your credit score. So do not bring up the balances on your credit. Do not transfer money from one account to the next. The accounts that have been verified by the lender, keep as is. Do not wire money from other accounts. If you have money wired from another account, now they're going to want to track that account. They're going to paper trail everything. If the lender has verified your money, you have solid money to buy, leave it alone. Next one, do not finance anything. Like I said, it goes with inquiries. Don't go out and try to finance another car, jewelry, furniture. Don't even go and get inquiries. After 90 days, they do that soft credit pull. They see that you've been out there busy using your credit. It's like, why is someone buying so much on credit all of a sudden? It hurts your credit score. So avoid those things. So those are the don'ts. Let's recap. Do not take time off of work your normal shift, work your normal hours. Do not run credit with multiple lenders. That's just my opinion. Every lender has their own opinion. I would not want to mess with. I don't want to be that bad guy that busts your credit up. Do not run up your balances on your credit cards. Do not transfer money and do not go out and finance anything. A lot of the don'ts have to do with credit. I've seen people qualify and not qualify. So that right there are the do's and don'ts when you've been approved. You do not want to disqualify yourself. And here's one bonus tip for you guys before I go to Q&A. These are the 5 checkpoints. The 5 checkpoints. Here's checkpoint number 1. Your current credit report. Your credit is good for 90 to 120 days. Just pay attention to when you last run credit because after 90 days, they will do a soft pull, but they won't run your credit again until the 120 days. The last thing you want to do is take over 120 days to find a house and they're going to have to run your credit, but you did something sloppy to your credit. So pay attention to when your credit expires. When is it 90 days? When 120 days? Pay attention. Check that. There's one of your checkpoints. Number 2, know your income. Look at your paycheck. Look at your bank statement if you're self-employed. Make sure your deposits and your paycheck is always steady or going up. You do not want to decline. If you decline more than 20%, they might re-underwrite your income. I see that happen all the time. So know your income. Next one, know your deposits. Make sure there's no random deposit you cannot explain. Payroll deposits, you're fine. If you're going FHA, you're allowed one deposit. That's 1% of the purchase price. So it's $400,000. That's a $4,000 one-time deposit. Other deposits, you have to source or back it out. Conventional, you have a one-time deposit of 50% of your gross income. So if you make 5 grand a month, that's $2,500 you don't have to source. Anything else that's not a payroll deposit, you're going to have to source that thing. Next, check your pre-approval letter. When is it expired? Goes with your credit. And make sure you don't look at a house above your pre-approval letter. If it is, make sure your loan officer updates your approval letter. I see it happen all the time. People's pre-approval letter expires, or they look at a house, they love it, but they didn't check their pre-approval letter and the lender didn't approve it. Now the lender's out of town and you can't get an updated one. So you want to check these things before you look at homes on the weekend. Hey, is it above my pre-approval letter? Let me get it updated. And last but not least, check rates. As rates are climbing right now, if you're watching this November 2021, you want to make sure, hey, with rates going up, do I still qualify? Do I still get that lender credit? Or has things changed? If it has, go back to your lender. Get your approval updated with where rates are at. So those are the 5 checkpoints you want to check every week as you've been approved. The do's and don'ts, the checkpoints, that will avoid you dropping your pants. So that right there is the secret and the keys to making sure you don't drop your pants. And the last thing you want to do is have your pants drop while you're approved for buying a home. Guys, if you found this information valuable, do me a favor. Save, share, and like this video. If you're not following by now, hit that subscribe and notification button. Guys, lastly, thank you for everyone who watched. We want to say thank you to everybody who watched. Our attitude is gratitude. Without you, there would be no us. So thank you guys so much and have a great night.